Biden intends to nominate Jerome Powell as the Fed chair, Lael Brainard as the vice chair, according to the White House. Just repeat, Biden intends to nominate Jerome Powell as the Fed chair and Lael Brainard as the vice chair, according to the White House. It says Powell's provided a steady leadership during an unprecedentedly challenging period, while Brainard played a key leadership role at the Fed. Does also say Biden has 3 Fed openings. That does include a new vice chair for supervision.
Hello, 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 hello! Hi all and welcome to another edition of Midday Market Review. My name is Phil, I'll be your presenter today. Thank you for joining us here at TraderCast. I'm just checking to see if this is all working as it should. We'll wait for a few more minutes for people to come in and join us, and then we can start the broadcast as per normal. Brilliant. Okay, so that's all okay. I'm feeling much better this week, so thank you very much for bearing with me. The persistent flu and cold symptoms are long gone now, and I think I just needed a few days to be out of action just to kind of get better. But hopefully you're all well. Hopefully you're all safe and healthy and enjoying this recent market volatility. Now, what we'll do today is we will start the broadcast in a normal way. I'll go very quickly through several things we should know before we start trading today, and then I will very quickly go and look at few markets and tell you what I have open. And what I might be looking to do. There's a runaway trade right now in Dow. I was being a sucker for a pip. I was waiting for a perfect entry, and it kind of slipped out of my reach. But I'll see if I can get it again. But that's it. Very briefly, top 5 things we should know before we start trading today. We have, just bear with me a second, from the geopolitical point of view or a COVID point of view, we have fresh unrests across Europe. Europeans took to the streets to protest the return of lockdowns and strict virus measures to stem a brutal 4th wave. Some demonstrations erupted in violence, police in Brussels turning a water cannon on the crowds. The most dramatic measures so far in Austria, where people woke up on Monday today to the 4th national lockdown and the prospect of mandatory vaccinations from February. So not many people are kind of happy with all of that. Financial markets in particular in US are completely unfazed with all of this. We've heard earlier strategies from Goldman Sachs, JP Morgan, Morgan Stanley. They were all reassuring their investors, and they offered their advice or recommendations on how to benefit from this near-term uncertainties. Rates, interest rates, investors are starting to believe central banks who are adamant they're not in a rush to increase base rates anytime soon. Hedge funds, bullishness towards the dollar is starting to evaporate a little bit. Not at the moment, because this announcement about the Fed chair caused a US dollar to rally, so we're seeing sterling lower, euro dollar lower, gold under pressure, crude oil under pressure, and we have dollar yen higher. Wall Street, i.e. Dow Jones, is moving higher, and the same thing with S&P. S&P is really nicely pushing. This is my resistance area here at 47.18. I'll talk about it in more detail a little bit more, but this is the reaction. This is the reaction to what's happening at the moment. We should be careful. It's a shorter trading week as well. So basically, some hedge funds are saying maybe this rally in dollar is overrun. Maybe it's gone too far already. So let's see. Leverage funds trimmed net long positions for a third straight week in the period through November 16, according to the data from the Commodities Futures Trading Commission. Even an interest rate increase from the Bank of England next month looks like far from done deal, with officials tempering expectations over the weekend. The other thing that we should talk about as well, from the need to know market risk and things which are actually moving the market, things which are triggering the markets today. We've just heard from Biden. They're nearing on announcements on the Fed chair decision. It looks like Jerome Powell is staying, which is good. So markets like that. They know what to expect. They understand the way he communicates. Uncertainty is usually not very good, so that's cool. Hedge fund cut dollar longs on signs that Fed hike are still distant. US intel shows Russia plans for potential Ukraine invasion. So geopolitical tensions there. We talked about it a couple of weeks ago. Very unlikely in anybody's opinion that will actually happen, but it's geopolitical tension. German Chancellor Merkel, COVID situation is dramatic. Tighter curbs needed in Germany. Not throughout the whole Germany. Hey, gold please, Philip. Thanks, and cable when you get the moment. Gold is Gold Master. Gold is pushing lower. 1828. We had a few levels below that. 1810 and then 1800. Nice and round number is also important. On gold and cable. 134.50. That's a big level on the upside. It appears to be bearish below that level. Absolutely. 134 to the downside on cable is hugely important support at the moment. The daily close below 134 would trigger further sell-off. I'll talk about it in more detail, but let me just go through these headlines as well. Some areas of Germany are doing quite well. Northern and western parts of Germany are vaccinated. They're in line with what's happening with UK, but the kind of eastern Germany.
The market now said to be pricing in a full 25 basis point rate hike in the June Fed meeting.
Wow. Okay, so that's the reason why dollar is rallying. Bundesbank, German economic recovery will likely take a breather. Okay, UK to require charge points for electric vehicles in new buildings. Australia to reopen to foreign visa holders in bid to revive economy. Treasury yields increase as focus remains on Fed chair decision. Dollar shines, euro suffers as COVID fears flare over Europe. El Salvador to create Bitcoin City. $1 billion bond offering for more Bitcoins from El Salvador. Oil prices are under pressure from both supply and demand factors. Japan working on release of oil reserves after US request. So that'll put the lid on any kind of a potential move higher in crude oil if they release the strategic oil reserves. Wall Street says to buy virus fuel dips as fears won't hit rally. So basically same old, ignore, buy the dip. And Chinese hypersonic weapon fired missile over South China Sea. So that's basically the headlines. Need to know market risk and something that we should pay attention before we start trading today. Now let me see where I am at the moment. So cable and gold. This week we have a shorter trading week as well. So US markets are closed on Friday due to Thanksgiving holiday. There are a few things which are coming up throughout the week which we should pay attention to. We have tomorrow we have Eurozone, UK and US preliminary manufacturing and services PMI data that will trigger volatility across the range of those markets. In particular, FX markets are reacting to these news about COVID at the moment. So let's see how they react to manufacturing and services PMIs. And then Wednesday is quite a busy day because we have RBNZ interest rate decision. So Australian dollar crosses will definitely move on any news coming from that event. There's a rate decision in a press conference. Then we have US durable goods orders in the afternoon, US jobless claims, and then US preliminary GDP Q3 figures. So all big data releases. Crude oil inventories, if you're trading oil, that's the big one to watch. And then FOMC minutes. There is no rate decision, but just the minutes will be released or in the evening as well. Sorry, evening my time, afternoon US time. And that will likely trigger further US dollar volatility. And then it'll tail off towards the kind of Thursday and Friday. Very little data. Eurozone monetary policy meeting minutes and Japanese consumer price index on Thursday. And then Friday, no data from the US, and markets are closed for Thanksgiving. So we could see a kind of a liquidity dry out or a dip in the volumes towards the end of the week, because US traders will be planning their extended weekend. Sorry, just breaking news here. Let me just see, where are we now? Bloomberg News. Biden chooses Jerome Powell. Yeah, we've heard that already. For a second term as US Federal Reserve Chairman. He's nominating Lee Brainard as vice chair of the board. She was actually considered to be very dovish as well. So she would kind of keep the stimulus going and so on. Okay, so that's where we are with the news on the equity markets and other stuff as well. So now let's go and check out few markets here. So the first things first, gold. Gold Master is saying, can we go and check out gold? So let me just do that very quickly. If you need anything covered, let me know. Coming to the chat room on a TraderCast platform. I'm broadcasting this. There's a number of people who are watching this on the kind of outside through the. Okay, sorry. In our bull flag for bullish gold. Okay. Gold Master is looking at the bull flag in an hourly. So we have a few elements here. If you remember from my open positions, and let me just. I'm still in those positions. I took my fourth position out. I've closed it. There was a partial. I was speaking to Alpha Trader as well, and
the White House confirming US President Joe Biden set to deliver remarks on his nomination for the Fed chair role at 1:20 p.m. Eastern, so 6:20 p.m. London time.
So these are my positions currently in gold. I'm still in those three because they are at the right place. So we have 1720, 1750, and then this one here at 1760. I took profit up here at 1875. If you remember, that was my partial profit area. And then I'm looking for 1900, and then above that 1915, and then maybe even higher. But this is expected a corrective pullback. But overall, if I go and check this price action, this appears to be very nicely uptrending market. The price is creating higher lows. it's bouncing off the lows, it's coiling and then moves higher and so on. So this is where I am at the moment. So I'm long gold, and I'll be looking to add to my gold positions. It's just a question where. So we have a couple of important levels here. This is the previous high, previous high, previous high, previous high. So 1830 is definitely an interest for me. But I would like to see a trigger. I need to see a trigger of some sort with a candle forming at that 1830. So we could see a flush lower and then maybe a wick forming below with the body closing above. Maybe, as Goldmaster was saying, in an hourly time frame or a 15-minute time frame at least, something to tell me that the sell-off is completed and then also buyers are returning to that level. But until that happens, I'm waiting. But that level is actually quite good. A loss, an end of day close below 1830 would definitely change my outlook, and I would do something different. From the kind of shorter term point of view, we also have a rising trend line in play here. So this is a rising trend line pointing to 1810 level, and I would also apply at the same time a fib retracement from swing lows from 29th of September at 1723 all the way up to 1875, 1876 high, and then that gives us this very nice fib retracement as well. So what I'll do is, I know there's plenty of things here on the chart, and I would like to keep it simple so that you can actually see the levels that I'm talking about. But we have a cluster of things here. So we have previous swing highs at 1830, and then we have cluster of these previous lows here at 1820, 1817 zone. We have 200 period moving average there, and we also have a 38.2 fib retracement. So looking at all of this, that's another level at which the price could possibly bounce off, but it needs to create something. It needs to create a bullish candle before I can engage with it, and the bullish candle in my book could possibly look like that. So I would like to see something like this forming here, okay, with a nice at least green top or a green body of the candle. That might pique my interest. We could see a wick below, flush below, and then a buyer's return. But until that happens, let's wait and see. Otherwise, we are trying to catch the falling knife. We're trying to catch the falling knife here as well. So 1830 is a good level. It's a little bit more speculative, but I want to see at least a candle forming in some way. So this is the hourly candle. If I go down to a 15-minute, this is a 15-minute candle. We're seeing a little bit of a bounce off here, but nowhere near what it should be. So that's where I am with the gold at the moment. I'm waiting to see if gold triggers anything at the moment. I told you about this dip here in Dow. I'll cover that in a bit more detail. I missed this trade. The other thing that we want to talk about is cable. And cable is pushing lower at the moment. It's not a sterling weakness, it's a US dollar strength based on what we are seeing here. Hey Robert, good to see you. Hi Lisa. Anybody else who is watching us, I'll try and say hi to a few people. Yeah, I can see there's quite a few new people coming in, which is okay. Hi Matthew, good to see you. The other thing that we should be talking about is cable very, very quickly, because I know Goldmaster is looking for that one. So let me show you where I am with the cable at the moment. So sterling dollar is seriously downtrending. There is no other way to describe it. Yes, thanks. All better now, Lisa. Thank you for asking. hopefully you're enjoying the courses, and you are enjoying the community posts, and you are finding it beneficial. Um, Now, where are we now with cable? Cable is downtrending, guys. So we have sterling dollar creating the sequence of lower highs. There is a bit of a selling pressure at the moment, and from the price action structure point of view, we have this.
So in the fixed income landscape, we see US 2 and 5-year yields rising to 2021 highs after this decision on the Fed.
We have these oversold bounce backs which are sold into. Now, market expectations were that Bank of England will hike rates very soon, and the central bank that's okay. Yeah, I hope it's beneficial. I hope it's beneficial. Now let's put it all in practice. So it's thank you for joining us, and thank you for your contribution to community as well. So the way I'm seeing cable was supposed the Bank of England was supposed to be the first central bank which was very likely looking to hike interest rates, and the central bank that's doing that, it's causing that particular currency, in this case sterling, to rally, and you can see a little bit of strength against euro. Euro is seriously impacted with this COVID, a further lockdown in some European areas, in particular in Germany and Austria and so on, against sterling. But this is sterling dollar, so sterling dollar appears to be under pressure. There was a little bit of positioning from a Bank of England messaging over the weekend, setting the expectations with the market that imminent rate hike is not as imminent as everybody else thought, and now this is all causing excellent. Okay, great. So so from the intraday point of view, I'm looking at a selling pressure here. From a very basic trend line analysis, we have high, lower high, lower high, lower high, lower high. So basically there is a selling pressure here. The price is below multiple moving averages, and these oversold bounce backs appear to be triggering a further sell-off. So loss of support, retest, and a push lower. Now from the longer term point of view, I'm looking at 134 area as a major area of interest, as a daily support. An end of day close below 134 could possibly trigger extension of this selling pressure to the downside. So the way you can measure it, you can either take the widest point of the rising wedge. In this case, it will be something like this, and you can say from the previous consolidation to this low, if the support is lost, that gives us 133.30 to the downside, 133. Loss of that level, 132, 130, 170 might come in play in that case as well. Alternatively, if we see a rally and an end of day close above 134.50, so an oversold rally and a breakout above 134.50, that could then trigger possibly a retest from above. This is a contrarian view. This is a counter trend setup. So basically a break above an end of day close above 134.50 could then trigger a very fast and furious move higher towards 136. Even 136.80 might come in play. This would be anybody who's short, the stops will be triggered, and the price would move higher, possibly even on a falling volume. So this is a really key level for everybody to watch, 134.50 in cable. So what I'll do is, I know some of you are new to the site, and some of you don't have access to either education or the community. So what I'll do is I'll save this chart and post the key trading levels in the community for other members who can access it to see and I'll do that very quickly now so that there is no confusion. And then I'll go and check out a few other things. We can start with some indices.
Just to repeat this was out earlier, but India is said to be planning to coordinate a release of its oil stocks.
There we go.
Moving back to fixed income as well, the spread between the 5 and 30-year US Treasury yields hits the highest level since March 20th.
So now we have India possibly releasing the oil stocks. We have Japan releasing the oil stocks. US was talking about releasing the oil stocks as well. So now they're trying to put the kind of ceiling with these oil prices, because obviously they're saying this is a clear indication of wow, there's a big gap lower in cable, 134 right now. Dollar yen moving higher, really good. Okay, cool.
ECB's Kazakhs here says as long as price pressures are transitory and from supply side shocks, monetary policy should look through it.
I am long ducks as well at the moment. I'll show you that in a bit. Let me just post this cable. This was a good.
And moving back to ECB's Kazakh says if supply side shocks pressure wages, then the ECB should act.
Okay. There we go. Posting this cable for you right now. Right now. There we go. That's posted. So here we go. That's posted for you. This is in the. If you go to the community tab here and you click on it, then you can see the posts. There is the week ahead from the macro point of view, events that could trigger the market, and then also the cable analysis with the key trading levels, all posted for you here. Okay, so now let's go back to the a quick routine here and go and look at some indices, because normally I would start with indices, but Goldmaster was rushing today. He wanted to know about gold and cable. I think he had the trade in both of these markets. So we did that topsy-turvy. So let's start with the indices. I am long DAX. Let me just show you where I am with that as well. So this is my long DAX trade. Just a minute. Here we go. Very tight stop. Sorry. Ah, come on. I have too many things open. My. Hopefully this is all holding. Now, hopefully I will probably have to keep the low resolution on the stream in order to show you all of this stuff that's open. But here we go. We talked about DAX. We talked about DAX setup, and there was a retest of support, and then this massive retest here, and then another retest here. So I'm actually quite happy with this trade. My stop is very tight. The original stop was slightly wider. It was about 50 points below the entry. Entry was at 16,085, or just above there, because cluster of the lows, support, buying pressure. So when the price comes to that level, traders remember it and they come and react to it as well. So this is a shorter term intraday trade. I'm happy with that one. What I'll do is, from the management of this trade point of view, I will move my stop at a break even now. So I'm going to move it at break even, actually just slightly above. I'm looking to take partial profits when the price goes up here, 16,180, 16,200. The reason for that is this is the low, this is the low, this is the low, this is the low. So this is that rising wedge formation, and the price flushed below. So this is a counter trend trade. Yet again, I don't want to be confusing anybody with the stuff that I'm doing. And if I am, I'm sorry. I know we have loads of brand new people here who've never seen this before, or you don't have any access to our education or access to our community. So if it is confusing for you, bear with me, stick around, and I'm pretty sure you'll pick it up along the way. Alternatively, come and find us and get in touch and ask the question. So from the point of view is that I'm seeing this as an oversold rally, and if the price does go up here, it'll be basically a retest of that previous support, which is now newly found resistance. So I'll be very quick to take partial profits around that level and move the stop loss a little bit higher, so then I'm locking in a little bit more. If I see a breakout above 16,180, an end of day close above this cluster of the highs at 16,200, that would possibly encourage me to look for more upside, and in that case I will reassess my position in a slightly different way. But that's where I am with the DAX. It's a kind of counter trend oversold bounce back trade based on this rising wedge sell-off and the retest of longer term daily 4-hourly support to the downside. I'll keep you informed about this trade as we go along, and if I change anything I'll let you know. But that's where we are with the DAX at the moment. Okay. Now, let me just double check something else. Crude, no, that's not good. Not setting up for a trade there. Dow Jones is, I was looking at 35,650 on Dow Jones. I was looking for that trade. I don't know what's going on here. So let me just show you where I am with the Dow. So this is the Dow that I was talking to you about. So Dow is uptrending quite nicely. There is no two ways about it. Okay, so all of the equity, if you look at this S&P and Nasdaq, they're more bullish than Dow, but Dow is also bullish. This is a corrective pullback towards a rising support trend line. Let me actually just double check something very quickly if we have any questions here. If you look at this S&P, apologies. Okay. So this is my Dow Jones here, and what I'm looking at is nicely and a clearly defined uptrending market. The way I'm seeing this is a pullback to support. So from the fib point of view, we have a couple of fibs here. So this is the first one, 38%, and then from this low down here to this high, my 38% is down here, plus low, 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 low. So basically a pullback would trigger that retest of 35,450. Really, the level that I was looking at was 650 as a really lovely area, and the retest of that level. Now I have two options here. The first option is to buy this now at the open and look for the continuation to the upside, and then look for the push towards this zone up here, 36,120, where it would be logical to look for some profit taking up there. Everything is moving higher. S&P is moving higher. Nasdaq is moving higher. 47,024 S&P. From the Dow point of view, I was possibly waiting for two perfect setups. So this was the area that I was looking at, 35,650, and I didn't react to this. So that was, so if I'm getting in this trade now, I'm getting at a slightly different risk to reward ratio, because it's not a same risk to reward ratio as if I got in here, because we are already 120 points higher. But it does appear to be that Dow is trying to catch up with S&P and Nasdaq. So the other thing that could possibly encourage me to go long here is if I see a rally and a breakout above this zone here, 35,830, that could possibly trigger a breakout and a retest, potentially opening the way for a squeeze into 36,100, 36,120, where another profit taking opportunity might happen. The risk to the downside is down here. Okay, 35,650. That's where the risk is. So risk is quite high, 120 points at the moment, 115 points at the moment, or thereabout. But let's see. I have nothing in Dow at the moment. Nothing in Dow at the moment. If I go down to a 15-minute time frame, 15-minute time frame is pointing to the same risk down here. That's the level. Yeah, I can't do anything with this. I've missed it. I've missed it. Okay, never mind. Now let's go and check out a few other things very quickly. So the other thing that most of the people who are part of our community are looking at is Nasdaq, or US Tech as it's known. This appears to be quite nicely uptrending. So this is a daily time frame, higher lows. If I go to 4 hourly, also higher lows, clearly defined uptrending market. Nasdaq is basically painting new all-time high at the moment. So we have lows which are bought, corrective pullback, corrective pullback, corrective pullback, corrective. This is the 4-hourly time frame. So basically each one of these candles is 4 hours worth of trading. So from the trend point of view, my current price is above rising 20, 50, 200 period moving averages. It's above rising multiple rising moving average, trend lines. So I have another trend line here. It's above previous all-time high, which is this area here. So this is the resistance, now newly found support. So as long as this structure stays in place, bulls are more dominant. So what would disciplined traders do? They would be looking for a pullback into this area down here, 16,500, for a potential rally. And then this is uncharted territory. So basically there's nothing up there that I can use with some level of certainty to say this is a resistance. It's a guesswork because it doesn't exist. The price was never up there before. So the only thing that we can possibly use are either field expansions, trend lines. So basically what we can do this, we can copy and then paste our trend line, and then we can just plot it here. We can say when the price hits this rising trend line, which is just a parallel trend line, I might look to take profit, which is very kind of loose way of pointing to a resistance. Or you can use round numbers. So we are at 16,700, so 16,800, 16,900, and then 17,000. Why? It's a nice and round number, because when Nasdaq hits 17,000, it's likely that, you know, it will cause mainstream media to shout about it. We'll hear about it on Bloomberg TV, we'll hear about it on CNBC, we'll hear about it on all social media channels that Nasdaq hit 17,000, and that usually sucks in retail traders to come in and react to that number as well. So let me just see, where are we now? I think I got another message. Okay, so from Nasdaq point of view, Nasdaq is clearly uptrending, supported. Bulls are more dominant here, and any kind of corrective pullbacks are likely to be bought. So we have another trend line here, and then we have another trend line here. So if I'm boring you with my trend lines, this is probably the easiest way for anybody who's brand new to engage with trading or look for trading opportunities, because the most basic training courses will teach you identify the trend, look for a pullback to support, and then look to buy in the direction of the prevailing trend, which is great. Now what could possibly happen is we could possibly see a corrective pullback here, and then a loss of this trend line. And then when that happens, there is a high probability that price will go seeking a next level of support. In this case, it will be this rising trend line here. That will correspond to the previous lows and highs here, and also 50 period moving average. Yet again, round number 16,600. Loss of that level. So basically buyers would likely be looking to buy around there for another rally higher. Loss of that level, possibly a short-term retest from underneath, could then open the way for a gradual move lower to another level of support, 16,500, 16,450, where buyers will again look to buy the dip and buy this kind of low. So unless that happens, you can either buy the breakout, which is more speculative, because this is all-time high, we were never there before, or look for some sort of pullback and look to buy there as a kind of corrective pullback against the overall more dominant trend, which is in this case bullish trend. So that's where we are with Nasdaq. I'll very quickly move on to the currencies now, and then we can go and double check gold again and finish it with oil. So euro dollar is under pressure. I think this is clearly exhibiting the euro weakness, euro currency weakness. It's triggered by this news about escalation of COVID restrictions in some European states that has direct impact on the economy of those regions, and in particular we're talking about Germany, France, Austria. So these are like big contributors to the eurozone as a whole, and this appears to be pointing to some major selling pressure at the moment. Loss of these lows down here, an end of day close, is pointing to a gradual move lower towards 120, 112, 111.50, 111 to the downside. Only a rally and a breakout above 113.30 could open the way for a gradual move higher towards 114, 114.50, 115, 115.50 to the upside, where the price would meet this a longer term falling resistance trend line, and also this would be a fib retracement as well. So euro dollar looks really bearish at the moment. There's nothing that I can say that differs from that view. It's sellers are more dominant, bearish traders are more dominant, people who are fearful are more dominant in this market. Nobody wants to own euro against the dollar. Cable, we talked about this already. This looks like a sell-off out of this little rising wedge. We have the same occurrence here, slightly different angle. We have a larger version of the same thing up here. So the same thing keeps on repeating over and over and over again. The key trading level for cable is at 134.50. If we see a rally from these current lows and an end of day close above 134.50, that could possibly trigger kind of counter trend short squeeze and a push higher towards 135.50, 136, 136.80 and so on. But until that happens and we see an end of day close above that level, bears are also in charge here. So stronger US dollar, weaker sterling. Dollar Japanese yen, completely different picture here. We are seeing a move higher. Sideways consolidation in dollar yen. We talked about this last week, and this is posted in a community as well as a breakout of this bull flag here, which resulted in a move higher. Breakout, retest, second chance to catch this ball, potentially looking for the extension of this bullish run towards 115, 115.60, 116, and possibly even higher in dollar yen. But dollar yen looks really bullish, really bullish. The price is supported by rising trend line. The price is supported by continuation patterns which are breaking out. The price is supported by fibs, moving averages. It seems to me that bullish traders are more dominant here. Now let's go and check out gold very quickly again. Gold, further selling pressure in gold. 1810, 1830 didn't hold. 1810 is the next level now, and then below 1810 we really have 1800. 1800 is the level at which some buyers might be looking to return again, which is down here.
Bank of England receives an offer to cover ratio of 2.18 at the buyback of the 1.15 billion 3 to 7 year gilts. The prior buyback was 2.48. So the Bank of England gets a 2.18 cover ratio in the QE gilt buyback today.
Anything else in the breaking news? nothing else new. Nothing else new here. In the news. Okay. Yeah, Dow is breaking out higher now. Beating myself up for missing on that trade, but anyway, we'll catch it again. Happy with my DAX. Happy with my DAX trade. So this is crude oil, guys. Crude oil appears to be coming to some interesting levels. Okay, so 75. From the trend point of view, we have a loss of trend here. So there is a loss of trend, retest, and a push lower. So now this becomes a corrective pullback. I am a longer term bullish oil, and I feel that because of the increase in demand, oil could break out higher. So the key trading level for me was at $80. As long as $80 held, this was a corrective pullback, and potentially we could see a breakout higher, 85, 87, 90, and maybe even 100. Not over next 24 hours, but a longer term point of view. Now, the fact that we lost 80 and there is a selling pressure and there's more talk about more, oh, gold, you beauty, yes. I think I'm gonna go along here. I just did my little scalp on gold. Let me show you what I did, and I'll go back to crude oil in a second. Okay, I got my first little trigger here. So this is a very much shorter term. This is much shorter term view on gold. So there is a selling pressure, and
So we're just moving into 8 minutes now until the top of the hour. We get US and European data. Starting with the US existing home sales for October. We're looking for 6.2 million on a prior 6.29 million. In percentage terms, the month on month, looking for negative 1.8% on a prior positive 7%. We'll also get from the Eurozone consumer confidence flash read for November, looking for negative 5.5 on a prior negative 4.8.
So from the gold point of view, we're seeing selling pressure. It could be overdone, and then there is your bullish hammer forming very close to this 1810 level. And this is based on that analysis that we had before, 1830 and then 1820, 1810. Below 1810, 1800 comes in play very quickly. So this was a slight bounce back off here. Really, 1820 would have been a better level to get in, but I got in at 1823. My risk at the moment is just below the wick of this candle here. Currently about 14 points in risk, 14 points in risk. But I would like to see if we get a little bounce back towards 1840, possibly even 1850 again. That would be a good setup. But my longer term trades are still open. And they didn't change. I mean, there's nothing changed here. So these three trades are still open from 1725, 1750, and then 1760. The partial profit was taken at 1875. This is just an additional trade now. Quite happy with it. Let's see if it plays out. If it doesn't play out, you know, it's about 14 point loss of the risk. So it's not a kind of a big amount of risk to take, but I would likely be looking to take profits on this trade much quicker if I can. I would treat it as an intraday trade in this case. So sorry, that's gold. It was basically just happening while we were talking, and the DAX trade is still open. I'll show you that in a minute. Let me just go back to crude oil and finish with that. before we go and do anything else. So crude oil, it's coming back to support 75. It's a nice level where traders could possibly be looking to find an oversold bounce back. Now, even if the trend changed in the sense that there is a high, lower high, slightly lower high, so something like this forming, or maybe even like this, like a really a nasty looking wedge, it wouldn't be unusual to see an oversold bounce back, at least a shorter term oversold bounce back. Now, the trigger would be the actual candle shape, so we would need to see something forming here which resembles a bullish reversal. The indicator is on oversold. We need a bullish hammer here, or bullish engulfing, or some sort of candle forming here, looking for a kind of indication that anybody who is shorting crude oil is possibly taking profits, or the fresh buyers are coming in and entering this market. So that's where we are with the crude. The fact that we have some nations who are indicating they will be releasing their strategic oil reserves indicates that they're looking to put a ceiling on any kind of oversold bounce backs in crude oil. But 75 is a good level. Loss and end of day close below 75 could open the way for a deeper corrective pullback towards 73.30, possibly even lower. 72.70 is another big level that might come in play. Alternatively, if we see a rally and an end of day close above 77, retest of that level from above as a newly found support. So rally, breakout, a daily close above 77, something like that, then possibly the widest point of this consolidation here could be used to be extended on the upside as a projected.
So moving into 3 minutes now for this US and European data. US existing home sales for October. We're looking for 6.2 million with the month-on-month percentage figure. We're looking for negative 1.8%. In the Eurozone, we get consumer confidence flash read for November. We're looking for negative 5.5.
So that's where we are with the crude oil. We have 3 minutes to the 3 o'clock, so 3 o'clock my time. I know people are watching this from various different time zones. We have some people who are brand new. We have some people who've been with us for a while. We have some people who are... Okay, good. Excellent, excellent. Okay. So if you have any questions, let me know. I'll be finishing this broadcast very quickly. I'll be back with you tomorrow at the normal time, same time again. In the meantime, I'll be working on some crypto markets, so I'll probably post Bitcoin and Ripple, Ethereum in the community today. We had a very decent sell-off in Bitcoin, almost 2%. Yeah, 2% or 1,220 points, 58,360 price at the moment. Litecoin almost 5% down on the day. Ethereum 2.7%. So it seems to me that cryptos are suffering at the moment.
1 minute.
1 minute. Let's see. If I get stopped out, I get stopped out on gold. This is probably going to be probably going to be the trigger, but I'm happy holding that long at the moment. This is where I am with my DAX. So some of this data could possibly trigger volatility in DAX. Let's see if I get my trigger to the upside. can see it here. 1, 2, 3 candles, and then indecision. There's a bit of a buying pressure, but it's not breaking through. So let's see if it comes to 16,180.
10 seconds.
High. So that'll be a lovely 16,200, something like that. Would be a good level. It would definitely be a level of interest.
6.34 million, better than expected, with a month-on-month percentage, 0.8%. Eurozone consumer confidence softer, negative 6.8.
Come on. You want to
So
give
just to
me-
recap that then, US existing home sales, 6.34 million with the change, 0.8% on the month. October inventory of homes for sale, 1.25 million units, which is 2.4 months worth. And the national median home price for existing homes, 353,900 or 13.1% from October 2020. Reminder as well, Eurozone consumer confidence, the flash reads softer than expected at negative 6.8.
Okay, so what I'll do with this information is I want to take half of my profits out on this trade. So what I'll do is I'll take some money off the table, close half of it off, and then I'll keep the other half running, but I'll move my stop higher. So I'm moving my stop at 16,120, if I can get it in. Yeah, that's it. So I'm locking in another 35 points on this trade. So I took half, not exactly what I wanted, it 16,180. Let's take some now and then move the stop higher, and let's see if I get a spike towards 16,200. I'll be moving my stop loss higher as we go along, and see if that plays out for the rest of the afternoon, because S&P is rallying higher, Nasdaq is rallying higher, Dow, I'm beating myself up for not taking this Dow trade, but hey, here we go. Happy with my gold trade, happy with my Dow trades so far. Let's take it from there, guys. It was lovely talking to you all. Stay safe, happy trading, and I'll speak to you all tomorrow at the usual time. Okay, bye for now. Thanks. And I'll speak to you all